The way that new Bitcoin come into existence is through the world of Bitcoin mining. Miners around the world all compete with their computing power to solve complex mathematical problems, and that contributes to the network security, and they're rewarded for their efforts and their computing power with newly minted Bitcoins. Bitcoin was designed with a predetermined limit of 21 million coins. When we think about Bitcoin mining, we realize that Bitcoin miners are using their computing power to solve these complex mathematical problems or puzzles. What they're doing is they're validating the transactions and they are verifying them, and then they are solving these puzzles and adding the transactions to the blockchain. So you can really think about Bitcoin miners as auditors. They're auditing and securing the Bitcoin network, and in exchange for doing that, obviously they have to have some sort of incentive to validate transactions, solve the underlying mathematical problems and puzzles, and then add the block to the blockchain. Well, they need to be rewarded for that, and they are. They're rewarded in the form of new Bitcoin. So that's the lure of mining, is the mining rewards. And so for every block that's added to the blockchain, in the Bitcoin blockchain, miners are rewarded with new Bitcoins. And this system basically introduces new Bitcoins into circulation, but it motivates those who have computing power to secure the network, keep it secure, keep it audited, verify the transactions, build out the blockchain in exchange for these rewards. So we have 21 million Bitcoin that will ever be produced. And in the way Bitcoin's protocol is set up is it targets a 10-minute block interval. So every 10 minutes, you have these new Bitcoin being dispensed to the miners in exchange for their work on the blockchain, right? They're verifying the transactions, they're solving the mathematical puzzles, and they're adding the transactions to the blockchain. The Bitcoin halving is an automatic adjustment that's made based upon the Bitcoin protocol to the reward that miners receive for securing the network. So back in 2009, if you were mining Bitcoin, well, every 10 minutes, the Bitcoin protocol was putting out 50 new Bitcoins, okay? And then that happened every 10 minutes. But it continues to have roughly every 4 years, or every 210,000 blocks that are added to the blockchain. 2012, the number of Bitcoin that was created every 10 minutes and available for miners for their work was 25. And then in 2016, it got cut in half again, another 4 years later. It was 12 and a half. And then in 2020, we went through a halving, and it got cut in half again. So the miner's reward got cut to 6.25 Bitcoins per every 10 minutes. Now, coming up in April, we're on target for like an April 21st, 2024 halving. That'll be the fourth halving that we've had. The first halving was back on November 28th, 2012. The block height was 210,000. The second halving happened on July 9th, and it was 2016. And that block height was at 420,000. And then the third halving event happened on May 11th, 2020, and the block height was 630,000. So this fourth halving event is scheduled for the block height at 840,000, which we expect to be around April 21st of this year. Right now, the block reward, the miner's reward, the block reward, what do you want to call it, is 6.25 coins per block. So every 10 minutes, miners are able to share a total reward of 6.25 Bitcoins, okay? And when you add that up over the course of the day, that's about 900 per day. So every day, 900 new Bitcoins come into existence and enter circulation. But where they begin is with the miners. And so typically the miners will sell them. They're usually selling them to fund their operations and whatnot. They keep some of them, of course, but they also sell them because that's how they make money. And so right now, every day, before this next halving, 900 new Bitcoin are coming online and are entering circulation. Okay. Now that number is going to get cut in half to 450 per day as soon as we have the 2024 halving, which is going to be in April. What's interesting is when you look and see the demand that's coming in from the spot Bitcoin ETFs, because they have to buy the Bitcoin, within 24 hours. after somebody buys the ETF. If they don't have enough Bitcoin to cover it, well, they gotta buy it within 24 hours. So when you look at the number of Bitcoins that are being demanded right now in 2024, it's multiples higher than what's being produced on a daily basis. So when you have a tight supply but a rising demand, well, what does that do? I mean, Economics 101 tells you it drives the price up. That's what's happening. That's what's happening right now. Now, if you look at the total number of Bitcoin that are currently in circulation, it's about 19.6 million. Okay, and that means that 93.5% of all total Bitcoin have already been mined. And the current Bitcoin inflation rate right now in 2024, pre-halving, before we hit this next halving, is 1.69%. That's the rate at which the Bitcoins in circulation are growing. But that number is going to get cut in half. That inflation rate after the halving on April 21st-ish of this year is going to reduce the Bitcoin inflation rate to 0.84%. So it'll be less than 1%. That's less than gold's inflation rate, because gold's inflation rate is based upon the new discoveries that are made each year. Now, what's interesting about all of that is that we tend to see prices rally into the halving. And typically you don't see, in fact, going back to the last several halvings, looking at the first, second, and third halving, every single time a new high is not hit until after the halving. And by the way, that number 21 million is not going to be reached until 2140. So that means that, miners are going to be continuing to mine for Bitcoin for, the next 115 years. So they'll be being rewarded for doing this. And so how high is the price going to go? And so when you slow that supply down and you cut it in half, but the demand doesn't get cut in half, well, then that's a recipe for higher prices.